I welcome CA Venkateshwar Bhatt, our speaker in today's webinar, and our coordinator, CA Ashish, ma'am, Ashish ma'am, CA Ashish Jain ma'am. Welcome you both in today's webinar. I requested CA Ashish Jain ma'am to introduce our speaker and start the webinar.
Thank you so much, sir. Good afternoon, everyone. I welcome you all to the 26th MSME Pathshala series. And I'm extremely grateful for the opportunity, and I would love to introduce today's speaker. So, introducing Mr. Venkatesh Bhatt, a distinguished chartered accountant and a gold medalist in the CA intermediate examination, who topped South India in CA final. He has enhanced his expertise through executive education at Wharton University and London Business School. So began his career with Hindustan Unilever in 1993 and has held leadership positions at Whirlpool and GE. Notably, he has served as CFO at Act Fibernett and Blackbuck for over a decade, where he was instrumental in Act Fibernett's rise to the third largest wired broadband provider in India, achieving industry-best financial KPIs. With over 20 years of experience in broad level positions, Sir was recognized as one of the topmost 100 influential CFOs in India by CIMA in 2016. Currently, he is the managing director of Astravai Services Private Limited, a consulting firm supporting startups and MSMEs in business growth, finance, and HR. He mentors startups incubated at Sastra University, serves on the boards of client companies, and is a certified independent director. Sir is also a co-founder of Climate Tech Social Enterprise driving climate change efforts across India while providing expertise on ESG and carbon credits. Additionally, he co-founded a baking and culinary institute in Bengaluru. Today, he will explore the non-traditional opportunities for CS to be partners in the progress for MSMEs. I welcome you, sir. You may please start your session.
Thank you, Ashi, for that nice introduction. And all the best to you in your own career.
Thank you so much, sir.
Can we get a confirmation that the participants can see the screen?
Yes, sir. Participants can see the screen.
Okay. And how many participants are there at this point of time?
Just give a minute, sir. So it's around right now. It's to login report is 200 around, but participant is continuously logging. Yes.
Sure. Okay. Thank you. Okay.
Sir, Raj Sabla sir also joined.
Good afternoon, sir.
Good afternoon, everyone. Sorry for the delay. I was busy in another seminar here in Gurgaon on MSME Yatra. So sorry for the delay. So good afternoon, everyone. I welcome you all in this today webinar on non-traditional opportunity for chartered accountant to be partner in progress for MSME. MSME may be micro, small, and medium businesses by prevail as the backbone of the economy due to their high share of employment and value addition. And members, if you see worldwide, the contribution of MSME in the economy of that country is 50 to 60%, whereas in India it is around 35%. So there is a huge scope of MSME in India. So this Indian MSME sector is projected to grow to 1 trillion by 2028. It may winning advantages, emphasizes a diverse range of investment opportunities across various industries and supply chain ecosystem, including but not limited to textile, food processing, agriculture, and more. As we all know that in India, number of MSMEs are approximately 10 crore, whereas registered are only up to 5 crore only. So there is a huge scope. I am sure that today's webinar will be a valuable learning experience for all of us, enabling us to enhance our capability for startup and MSME. For valuable insights into the subject, we are honored to have our speaker CA Venkatesh Bhattji and coordinator CA Ashish Jainji, who will provide expert guidance on the topic. So thank you for joining, and my best wishes for your learning. Over to our honorable speaker, sir.
Thank you, Dr. Chala.
Thank you, sir.
Okay. So let me start off by first of all congratulating all the participants for taking the time out and joining this session. There is a lot of interest across the CA community. When I have traveled around the country and have been part of many CA chapters, I see a lot of interest in the chartered accountants in untapped opportunities in the MSME sector. And naturally, because the minute you go out of the metros and travel out, what you actually see, apart from the industrial corridors of the country, lot of MSMEs everywhere. And obviously, CS need to be their partners in progress, and that level of interest is there. But the fact that you guys are taking out 2 hours and investing into this means you are taking the first step beyond interest in terms of investing your time. This session, in a way, has been covered in the Pathshala also in the past in slightly different formats. Where I think I will make a somewhat different approach here is that number one, I'm going to, while we are talking about the opportunities, I will also talk about what are the kind of internal changes CA organizations need to bring in order to tap these opportunities, which is many times many speakers don't talk about. For example, if you think of an athlete, okay, think of a boy who's good as an athlete. As an athlete body is good for running, long jump. Anyway, a lot of you have seen Olympics and probably have tried a few in your backyard as well. The opportunities are different, but then in order to go for a long jump versus a running, there are changes that you need to do in your technique, your body, training needs to be different. So many things are different. So every one of these opportunities when we talk about, it is not that today morning I decide to do litigation. Tomorrow morning I will go and raise funds for MSME. Things don't work in that fashion in reality. So each of these require a different mindset, different skill sets, and different teams under you. So these are the kind of things that I will additionally cover. A lot of the topic subject may, for some of you are experienced enough, you may find that probably there's nothing new in that you have heard, because probably a lot of this is covered in other seminars as well. One thing that I try to do is put all of this in one place, so you get a totality view of all the opportunities. Deeper questions in this, I would suggest you can put it to the all coordinators here. Ashish Jain will be happy to actually to compile and send it to us. If we have the time towards the end, 10-15 minutes, we'll try to spend on the question answers. If not, please be rest assured that you can write to me, and I will, to the extent possible from my side, I will try to answer your questions even later. So you don't need to be worried that your questions are not addressed here. Okay, so let me move on to the slide. Okay. So probably this is a very, very often quoted statement. Change is the only constant. I am sure any CS who has attended at least a few seminars of the institute, in at least one seminar he would have heard of this. Change is the only constant. Why I'm even starting with this statement? See, as a traditional practitioner, many chartered accountants today are worried. That is why you are seeing two faces there, two masks. One mask is crying, the other mask is smiling. Many chartered accountants today are worried that their existing base of traditional services is getting eroded. That is getting either replaced by more technology, or simply no longer the paying and profitable, if I can use the word profitable with the relation to CA profession, profitable customers or clients are fleeing away. They are not there. So what you are left with is really where there's a lot of hard work and there's not enough money. This is happening over a period of time. That's a fact. But then this change is also a reality for a lot of us. But you can look at it both ways. You can be happy that this change is happening and be ready to embrace it. Many of you who are less than say 10 or 5 years in the profession will be of that mindset. You are fresh into the profession. You are not really burdened by history, legacy, my firm has been in practice for so many years, those kind of thoughts. But the ones who have been in the practice and have really got something out of the traditional services are the ones who are more worried, and they are in a denial mode. They are unhappy mode. When we talk to many of these kind of CS in around the country, I see despair. I see concern. They come and discuss, but the question is not that what is that I can do. They are thinking in terms of what the industry should do differently, understand the CA profession better. Those kind of approaches, they are putting the onus on the clients. That approach never helps anybody, whether it is CAs or whether other. At the end of the day, as business or a profession, we need to change according to clients. Clients are not going to change according to us. So the approach from our side is that embrace the change that's happening in the industry, in MSME, and then see how we change according to this requirement, and then reap the benefits out of it. And the opportunity in front of us is really vast. So we'll cover India as a vast opportunity area quickly, and then what do we mean by traditional services, and then what are the opportunities for MSME sector for CA. We'll have a fresh look compared to what many of you would have been thinking. And that's one session I'm reasonably sure that most of you will find something in addition to what you have been thinking as an opportunity. There are many new opportunities that are coming CS way. And then we'll also briefly touch upon MSME funding. I'm not going to spend too much time here, but this is definitely an opportunity because we believe MSME as a sector is underfunded. But then they're underfunded for a reason, and that is where CS have an opportunity to play. We'll cover this area, and then the new lens for new opportunities. There could be a great sight ahead of you, but if you are wearing spectacles which is completely black, you can't see through that spectacles. So in order to understand and appreciate and take the benefit from the new opportunities, you require new lens for yourself. That's the last part that I will cover. So during this period, any questions, etc., you can keep sending to the coordinators, and I will answer them later. India is a large market to capture, despite CA numbers going up year after year. There is a reason why the number of CA pass percentage is increasing. One, definitely, today's CA students have a better opportunities to learn. Institute is taking a lot of efforts to ensure that one or the other kind of assistance is available to the CAs. And the other side of this is the supply side. From the demand side, industry always cries that there are not enough CAs. I am coming from the industry side, I can tell you this, that there was a point of time where as a company, we can't afford to take CAs. They are too expensive for what we could do. They are too expensive because the supply is in the limited numbers. So that institute is trying to do, so the numbers are going up. But despite the numbers going up, we are still a CA shortage country. This is last year's numbers. Most of you know these numbers. Institute is yet to come with the updated number for 2024, but for our purpose, this is a good enough starting point. See, the full-time COP holders, if you see, is 1.5 lakh out of 3,90,000 CS in the country. This 3,90,000 probably would have gone this year to a 4.1 kind of a number over the 2 years. But it's not it's a guess at this point of time, because until the institute publishes, we wouldn't know. Many CS also migrate out of the country, and those numbers also need to be considered. If you see the mix of the percentages, unsurprisingly, West has the largest number, which is out of the total numbers, 1,28,000 is just West alone, and the next is in the South, and North is 75,000, and East is 29,000. Central is around 77,000. It is a mix bit tilted towards West, but it's largely even mix across the country of the total CS. Out of this, 1.5 lakh CS are practicing. Many CS will feel that 1.5 lakh is a large number. This large number of CS is the reason why we are not getting better fits. That's the kind of logic you will hear from many of them. Is that true? Let us understand. So if you look at the number of MSMEs, okay, so these numbers can be, Raj said around 10 crores. The estimated number as per the latest government numbers is around 6.5 crores. estimated because a lot of these numbers, the people, MSMEs do not even register. So it is based on some of the parameters that we take a guess, and the statistical institutes actually figure out these numbers. Registered MSMEs are around 2 crores. This number would have now come to 2.5 to 3 crores. So this began this 1 year old number. So let us stick with these numbers. If this is the kind of number, in this we need to remember that large number of these MSMEs are micros. So 88% is micro, 11% is medium, and then medium and small, and the medium is a very minuscule 0.4%. But 0.4% of 6.5 crores is still a large number. That's the point that we need to remember. So if you really do the math by yourself, you will figure out that even assuming that all the CS are independently practicing, the people who are practicing as CS, you have at least 123 MSMEs per CA. If you consider only small and medium, even then it is around 15 MSMEs per COP. Okay, you just consider this 15 MSMEs 1% of spend of their P&L as towards the finance and towards the CA kind of professional services. You do the math, you will see that the kind of revenue that each CA can look at, just 1% I'm considering, okay, is still much larger than the average CS today's profession, the practice income in the country. Why I'm saying 1%, why in reality it is much, much smaller. That's the difference between traditional and non-traditional. So when you look at traditional, what are we talking about? We are talking about two: attestation services and traditional advisory. What are the attestation services? Audit services covering statutory audit, internal audit, due diligences, and group reporting. Company formation, certificate issuance, department filings. Other certifications and attestation services. This is the traditional, CAs have been doing this for ages together. In traditional advisory, it is advisory, so representing the firm in various forums like tax litigation and guidance, compliance and regulatory services, payroll management, or control study and execution support. So very even in the control study and execution, we are not talking about a very deep dive into the company, which many CS in the past were not equipped to do. They mostly operated from their office, and their team did not consist of kind of experienced people who can really go deep into a firm and understand its operations, understand its technical part of its operations, understand the market, and then figure out what are the things that the organization should do to improve its profitability and improve its balance sheet, etc. Instead, it was more of a typical extension of an internal audit, where you look at what are the control mechanisms, as per the laid down standards, and help them to actually set these things right. Now, mind you, even these have over a period of time evolved. So, compared to the time when I qualified 30 years back, kind of the framework that was there. If I compare that to the current framework, there is a huge amount of complexity, huge amount of detailing that leads to a better quality have been built into the standards. Actually, the other issue that comes up many times is that while these standards have evolved, many of the CA firms haven't. So there is a deficiency of quality in terms of even rendering these traditional services, and that's a topic by separate by itself. So I'm not even going there. Right now, we are assuming that these traditional services are being rendered by the CAs, and they are earning their current set of revenues. Now, what is happening here is that statutory audit or an internal audit, for many of these MSMEs, these activities are either required by a specific government requirement, or maybe one of the investors might have asked, but that is in a very, 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 very minuscule percentage of the MSMEs. So most of the time, this is done as an activity, as a tick box activity. And the truth is that the clients do not see any additional insights coming out of any of these audits or internal audits and due diligence or group reporting. I have seen many of the reports of the CA firms. They are very, very, I would say, petty issues are being reported as internal audit issues, while if you really look at the organization is bleeding a lot of money. It is into losses. There are inefficiencies across. None of those get reflected even as either directly or indirectly as an internal audit point. And hence, when those kind of reports go to management, management just trashes it. It doesn't really help them to do any kind of specific actions. So that's the downside of the traditional services that we render if we continue to do the way we have been doing in the past. So, in MSMEs, what was the work done? Audit and related certificate related work for MSME, regulatory compliances, and then responding to and representing the MSME in the regulatory forums, bookkeeping services. Many of the firms do bookkeeping services. Probably they spin off a separate firm, and that will conduct the bookkeeping services under the institute guidelines, of course. And then audit is rendered by the traditional CA firms. And then personal tax return of owners, founders. This is the kind of traditional MSME services that are being rendered. Question is that do you want the life cycle of the Millennium CA to be the same? Lot of files on the table. You can see the images on the screen, right? So do more and more number crunching and help in terms of this traditional services. What it requires? It requires, mind you. I do not want to undermine the effort involved in the statutory audit or internal audit. It is a lot of effort. So, question is today, what is the worry is that for the effort that goes in, are we getting properly paid? And that is where the center question of CA is actually looking at non-traditional services is coming up. So, do you wish to remain confined to the traditional practice areas and geographical boundaries of our nation? Do you want to remain focused in India and its whatever traditional practices, and are we? Our great grandfathers did a certain kind of CA practice, and then next our predecessors in our firms did a certain kind of practice. Do you want to extend the same logic into our next 20, 30 years of practice, or do you want to really look at differently? Is the question that is being faced by every CA who is not looking at retirement, who is looking at building his or her firm into a large setup and make something out of it in terms of really creating a legacy or as a firm. This is a very famous statement of Napoleon Hill. Napoleon is a very world famous basically personal development book author. The only limitation is that what we set up in our mind. There are no real limitations in the real world. Okay, it is a very big statement because we all know at the end of the day, as a person, if I ask me, I have many limitations personally. I have many strengths. At the same time, I am aware of my limitations. I have my own weaknesses. Okay, so why is this Napoleon Hill saying that? The only limitation is that in your mind. What he means here is that a lot of the limitations that you are putting up today to think differently compared to a traditional CA is in your mind. It doesn't really exist in reality. That's the point. It's not that you are a Superman or a Spider-Man, that you don't have any limitations. That's not the point here. The limitation that you think is hindering you from getting into a new area, that is most of the time in your mind. So let us look at what else could be done. So is CA just considered to be another degree? This is another. I have seen this question coming up in nowadays in many other CA forums as well. Because of various currently running factors. Is it CA just another degree? For many of us, it is not. For us, for me, I'm 30 years plus experience to CA. CA is the one degree that transformed me from something to a completely different level of success, job satisfaction, personal wealth creation, and certain status in society. And I'm sure each of you have completed CA with these kind of targets in mind. So it is a culmination of your hard work and effort to become an esteemed member of a renowned and a respected profession. A CA is not just a degree; it's an emotion, and it is to you when you clear CA, you have that huge satisfaction that you tried and you achieved something. Now, it should not stop there. That hard work that you put in to become a CA needs to continue to really carve out your path ahead. That's the simple point of this slide. So, Can you not exceed our own expectations? Why should we limit ourselves into only the traditional services? These are the questions. Sometimes you may think that this is rhetorical. These questions we have asked, that's why you are coming and sitting here. So why is the speaker again asking these questions? The point here is these questions, when they are being asked, so you have to seek answers to these questions rather than getting stuck in these questions only. When I see this question, when I ask this question, probably you will immediately say, yes, I have thought about this question. My immediate answer will be, have you really thought of any specific answers to these questions? Okay, why can't we exceed our own expectations? How do I exceed my own expectations? What do I need to do is the question to be asked. Let us look at the fresh opportunities for CAs. What are these? Fundamentally, you cannot do today's business with yesterday's method and be in business tomorrow. Simple. And this is not only for CS, it's true for businesses across the spectrum of the industry. If you are doing today's business with yesterday's method, you will not be in business tomorrow. Go to any traditional CA office. You don't see significant difference compared to a few years back. It's the same set of papers all over the place. Same kind of table arrangement. Okay. Same kind of thinking, similar kind of clients walking in and doing. Approach is what? Fundamental approach of a chartered accountant has been in the past. I am like a doctor. Okay, I will sit in my clinic, wait for clients to come in. Okay, wait patients. I will diagnose them, and I will give a solution. It worked till a point of time, but this will not work for non-traditional areas for a very specific reason. As long as the question was how to solve a tax problem, how to solve an accounting issue, this approach worked. You sit in your office, somebody carries their books to you, somebody sits in front of you, dutifully in front of your table, and you give them advice after doing the study of the. But in today's businesses, if you really want to add value, you need to be part of the business. What will mean be a part of the business? You can't become a job holder in that business. As a CA professional, you are not allowed, right? I'm not saying you need to be a job holder there, but are you part of the discussions of the client in terms of specific opportunities that we're talking about? Are you part of their strategy table? If when you are being called in as an expert and you participate in an internal business discussions involving these opportunities, this is the fundamental change that the CS need to bring in. Till you reach this point, and you need to bring the changes required at your end. It's not that anyone is going to, from outside the institute or clients are going to miraculously do anything differently. If you want to add value, you need to understand the client's business, like the back of your hand. You can't say that, I really don't care whether you run a fisheries business or you are in an exports business or you are in a fashion design. For me, any of these business all are same. Everything is just the P&L and balance sheet. That is the traditional approach, and that is why we are saying, that approach is not going to yield any, better business benefits in future. So, first question that I would ask most of CEs, okay, do you even know your market? Look at your mix of clients. I'll give you 1 minute. As a CA, practicing CA, can you tell me how much of your clients are micro? Percentage you have to tell me. How much of your clients are small and how much of your clients are medium? Give me percentages. I have done this in live discussions. I can tell you most of the CS do not even know this percentage. They don't even understand their client base in terms of which segment of the MSME their own clients belong to. This is the reality. The point here is that as we go into the traditional approach and non-traditional approaches, each of these sectors, each of these micro, small and medium require a different approach. Now, one of the calls that you need to take is that which sector you want to play with. Do you want to be in micro? Do you want to be in small? Or do you want to be in medium? Now, you can be in, I wouldn't advise you to be in all three, to be honest. unless you are really a firm of many partners, and then partners are able to focus. But you can still do, according to me, two of this, micro and small, or small and medium, you can still do. However, your approach to micro and your approach to small needs to be different. That's the fundamental point. So start with the understanding your market. Now, when you do this understanding, what you suddenly will realize is that if you last 2 years, 3 years, when you look at, probably the mix will change, but then you will find that 80% of your customers in numbers give you only 20% of revenue. Percentages may vary a little bit here and there, year on year, but this is the truth for most of us. And 20% of your customers bring in 80% of the revenue. So, if you start applying all the ratios that you go and advise to your clients to your own business, first you realize that if I do this ABC analysis, there are some businesses that I shouldn't even be doing, because if you really apply your cost, hourly cost that is going into that client, you will realize that many of these clients are negative, especially the ones which are in the C category. Okay, so where is the additional time to get into non-traditional areas coming? In the C sector, in the C class, which is maybe 60 to 80% of your client in numbers, but who are giving only a very small percentage of your revenue. This is the standard Pareto format. This is I'm sure you know that, but I can tell you most of us do not apply the same Pareto rule to our own businesses. So as a CA, if you have to do anything differently, what needs to be different? To me, the first thing is you have to have a go-to-market strategy. Okay, we'll come to that, because you'll say it doesn't allow us to advertise, right? I understand. Okay, you need to have a strategy for client acquisition. You need to have a pricing model, and you need to have a service delivery, and you need to have collection. In my experience, in different cities, when I look at CAs who have done very well, what I have seen in the past is that even within the traditional services, the CAs who focus on very specific segment over a period of time does very well. So eventually, it is about how do you want to be known? Do you want to be known as jack of all arts, or do you want to be known as a tax expert? He is she is the person to go to GST solution. She is the person to go to if you have a litigation issue. You need an arbitration in our city. This CA is really good. So eventually, for a CA, go-to-market strategy is identifying a particular sector, doing a lot of work, and let word of mouth do the activity by itself. Why today many CAs do not get new clients is their firm is not known for anything specifically as a specialization. They do everything. They do accounting, they do audit, they do internal audits, they do tax issues if they come, they handle. So at the end of the day, it looks like a supermarket where you can get any services from there. The thing is that then, what is one disadvantage of supermarket? You need anything premium. You need anything with the top quality. You don't go to a supermarket. Instead, you go to a specialty shop. Same thing happens with the clients as well. So once you understand the go-to-market strategy, do you have a client acquisition process? What do you mean by client acquisition process? Do you really decide anyone can come and become a client, or do you have a logic? Do you say, okay, this is the kind of requirement as far as I am concerned, as far as how the client should be? Which class also? It could be micro, it could be small, it could be medium, but which class you want to attract? Because the more one type of work you do, you become better expert, and then eventually you lead to a scenario where you can actually stand out. So your client acquisition process has to be very clear. How do you acquire these customers? And when I say client acquisition, it's not about going and marketing. Although there are certain things that definitely you can do. There are common platforms where chartered accountants are allowed to go and give their expertise. There are local industry forums where you should be participating. You definitely these kind of strategies will work. None of them are going to work like in 6 months. Okay, suppose tomorrow you say, okay, I am going to participate in the local forums. Okay, and I should start seeing a flow of clients to me. It's not going to happen. But if you are very clear about which area you want to do, very specifically target your when you are actually talking about you show your expertise in a particular area and pick up those engagements where that expertise can be displayed. This is how you, eventually your the market where you are operating will start accepting you as a specialization special expert in that area. If you don't do this, okay, you say I can do this, I can do that, you will keep on giving a confused signal to the market. That's the simple point that we say. So client acquisition, there has to be a strategy. Then the pricing model. When you start as a fresher, as a CA, you are hungry for business. So what happens is now anyone is welcome to your office, and you will do any kind of pricing just to get the initial clients. Okay, no problem. You have done this. I understand. But many CS problem is that they continue the same into their subsequent years. At a point of time, you have to have a pricing model. You have to say, this is how I'm going to price. If my pricing, I estimate a number of hours into this for myself and my team, and I think this is a kind of expenditure that will be there. This is a margin I need to do, and my pricing is going to be this. Obviously, you are not going to explain all this to the client, but when you discuss with the client, you should be able to articulate why those number of hours are needed and should be able to justify. You can do all that only when you have a pricing model. When you don't have a pricing model, what happens is now the client may offer 50,000, client may offer 2.5 lakh. You don't know whether 50,000 is profitable or 2.5 lakh is unprofitable. You are, as long as it is anything above zero, you are okay. So this absence of a pricing model also leads to an issue. Now, at any point of time when you have adopt a pricing model, you already have acquired customers who you may not have applied a pricing model. So you need to then figure out, okay, you carry on with the existing customers, but you don't acquire new customers unless you apply pricing. Then service delivery. I have heard this from very, very eminent CA speakers. Many CA firms do not have quality standards. Anything that goes out from their team, okay, doesn't have any kind of a quality check. There are many CA firms where the most junior article student who has come yesterday sends out a final P&L and balance sheet to the client without anybody at the team level even reviewing it. I'm just talking about review, but there are so many quality standards institute itself has set up. Now, if your service delivery is not of that quality, okay, eventually you are not going to build the clientele who will respect you for quality. The minute you don't play for quality, you will end up playing on the lower end of the market, which is going to be only very price sensitive. So it is for us to decide whether you want to be in the lower end of market or higher end of the market. And I'm not talking about micro as a lower end. Even in micro, you can still deliver a good quality and can command a price. Obviously, you need to select your clients carefully, and that is where I said client acquisition, you have to have clarity. Then do you have a collection process? Many CS firms have a huge amount of outstanding not collected. Then many have a policy that, okay, I hold on to that till a situation comes when the client is in a desperate situation. At that point of time, probably I am able to collect. But that need not necessarily be. At the end of the day, a profession is, you have to think of a profession like a business. A business has a revenue policy, it has a pricing policy, it has a collection policy. So in specific assignments, without an advance, we don't start as a firm. That is our standard policy. If the client is not convinced about our quality of service, is not ready to pay an advance on the table, then we do not start work. Why do we do that? What is the problem in starting? Is it do we have a working capital problem? No. It is a sort of a test. It is sort of a test in terms of is the client valuing us enough to commit that money on the table? If he has not reached that point, we need to still do work to convince the client of our use. Only when the client is continuously thinking of us as a high quality CFO, then only you will be able to get the collection into this. Second is that, do you really, once you are collected in advance, or suppose for some reason he or she happens to be somebody through your connect who has come in, so you are not in a position to do any kind of an advance collection. Anyway, advance, no one is going to give you 100%. You will always, in every client, you will have a subsequently some billing which you have to collect. What is the policy on collections? Many CA firms don't have any policy. The client will not pay for years together, 1 year, 2 years. Every year it is that this year I have a problem. Next year there is a depression. Next year there is a family issue. Fourth year there is another problem. So accumulation continues in the client account. So what is a good business? What does a good business do? They have a cutoff. They are saying, I have worked on credit policies of the many companies. Irrespective of size of the client, customer, one billing cycle, second billing cycle. Second billing cycle, if the money hasn't come for the first one, when there are two outstandings, work stops. Now, if you don't adopt that kind of a policy and very, very strictly start applying to the clients, you will have an accumulation on the collection. Why I'm saying all this is that the way traditionally CS have done, they have not followed any of this. So anyone can become their customer. Anyone can actually run up a large bill, and because there is a large bill, there is those customers continue to be serviced. So your team is deploying their hours into this. So you have a continuous problem of how to actually extract any value out of it. So the approach that I'm talking about is relevant not only to the non-traditional, even to the traditional ones. We have to think like business when you run your services. Okay. Adopting a progressive mindset is the most critical part. What does this mean? So we keep, as a firm, when we run our own practice, here, we keep asking this question every year. How much of technology adoption we have done in our own practice? Are we still doing the old way? Okay, take data, start creating one new Excel sheet, put all the data together, and then go back to the client. Or in what part of this we have brought in any kind of technology? And it's a very critical test that we do. If quarter on quarter we are not actually able to bring in new technology, that basically means we are actually falling behind, because the world is rapidly changing. You take any area today, take an area like medical, amount of technology that has come in, even in terms of even the past information and knowledge is amazing. Take example law. All the progressive legal firms have a digitized database for every possible case that can actually impact a particular client's work. Obviously, having just the digital database is not enough. Otherwise, ChatGPT would have been a chartered accountant, right? That's not good enough. However, it is a must. It's necessary. None will be sufficient. So at the end of the day, a personal, professional expertise is the differentiator. But do you have that technology mindset? Do you adapt it to the new technology? How many CS have even a very simple office project management software in their office? Many of them don't. Many CS don't. When I talk to them, they can't think beyond Tally and at best nowadays as Zoho. They don't have exposure to other ERPs. They cannot even distinguish between a full-fledged ERP versus a mid-sized ERP. They don't, even in basic something like an accounting, they don't have understand. If you don't have an understanding, you don't expect then clients who are ready to pay and who are more technology driven to come to you. They are not going to come to you. Regular meetings. The traditional CS work by sitting in their office, okay, and expecting clients to come to them. But in the modern way of doing things is that you set this rhythm between you and the client in terms of frequency. You agree with the client. We are going to meet maybe once in a month or twice in a quarter. Some of these meetings can be digital. It doesn't have to be that you have to go to a client. But as a CA, when you have critical clients, those clients you should be meeting not when they have a requirement or you have a requirement. You should be meeting to understand what is happening in their business. You need to give them project updates in terms of how things have progressed. I have seen this many legal firms do it. They set up where they come back and say, okay, this is the progress you have made in the last 10 days or 15 days. Makes a huge difference. The client becomes very, very comfortable. If the client only has to confirm, to check, and you expect the client to trust you, saying that now as a CFO, we are very good people, nice people, so the client should trust. Things don't work that way. So this regular meetings is important. Even within the firm, those regular meetings are important. If a firm is of 20, 25, 30 people, how frequently there is a regular rhythm of daily reviews, weekly reviews of activities that are supposed to happen. A lot of times things fall between cracks because only when there is a crisis certain things are come up. It's not that there is a review mechanism that has been set up by the partners or the leading team of the total firm. Mindset, you need to, first of all, you need to move to a digital mindset and you need to acquire a team that is digital mindset. If you keep taking people who cannot think digitally, who still think in the olden days of and this happens in many years because they need people who understand taxation, understand accounting. So who are those people? Those people who have already worked in some place. Where they have worked in places where there is no technology. When you get them, you are again infecting yourself with another virus, a virus of no digital. You have to bring in people who have that kind of skill set into your setup in order to bring digital mindset not only in you but across the firm. The lowest team member in your organization should be talking about the technology. The technology need not be very high end. It could be a very simple project management software. It can be very simple. Can we not use clear tax here? It can be use of let us say they have a question, 4 or 5 different databases or places where they can find answers. Are they thinking digitally or are they still set in the old mindset? Is the important question for you to become progressive. Then, do you have meaningful data analysis team with you, or your team data analysis is restricted to saying that okay, travel analysis match the P&L is arriving at a certain number of certain targeted profit is being achieved, a balance sheet looks okay, or is there a real meaningful data analytics? If you have an internal audit, do your internal audits work on a real technology-based sampling, or it is still random sampling? If you are doing legal work, litigation work, to what extent you are doing a data analysis in terms of every possible important cases that are there in that particular area, how many are for us, how many are against us, what is the progress that has happened over the period of time? Do you have data analysis? If you don't have data analysis, I'm telling you, over a period of time, you become a fossil, because then you are going to operate out of memory, and that is the best cure. That is the best way to get into a problem. You should not be operating out of memory. You should always operate out of data analysis. And the last is, you should never be happy with the process as it was last year or even last quarter. You have to keep thinking in terms of process improvements. What went wrong last time? Which client was unhappy? How many of us even have a clear understanding and data points on how many customer complaints were there from our own customer base? The customer complaints could be very small thing. Some data went and the customer came back saying that you are not even looked at the data correctly. Oh, sir, no, sorry, sir, no problem. I will correct it. Somebody sent it. Now, when this happens, is it being tagged inside the setup as a one time where we did not send the right data to the client in the first place? First time right is not going to happen automatically. First time right will happen only when you build that as a mindset in the team. So every time something has gone wrong, it is not about blaming the person who has made a mistake, but as a firm, why did this mistake happen? Where did we go wrong? And how do we really set this right so that the clients never have to come back and tell us that we were wrong? It may be small thing, it may be big thing, it doesn't matter. That's a very important the progressive process improvement mindset that has to be there. To me, in my experience, these 4 or 5 things make a huge difference between a CA firm that is very, very progressive and can actually tackle many new areas versus CA firms that cannot do anything, in terms of new what they want to do. Because if you don't have any of this, you may have the willingness, you may have the intent, you may have the hope to get into new area, but every time you try to do something, the lack of all these elements will hold you back. Having said this, now let's look at into what are the new opportunities. See, This I would put as this matrix as a total category of services where new opportunities are there. One is financial advisory services. We'll go into each of these separately. So I'm just enumerating them. Then risk management, internal auditing. Now you may ask, okay, these are, you only just now said these are traditional. Why are you putting in the non-traditional? I will explain why I'm putting them. Taxation and regulatory compliances, financial reporting and analysis, business valuation, startup support and mentoring, sustainability and social sector, forensic accounting and fraud reporting, independent direct services, outsourced CFO services, insolvency services, business succession services. Having said this, no, when I look at this, I realize that no, I have not put what Ashi is doing, which is litigation. Probably, it requires an additional legal angle to that, so I have not covered it. But definitely, why not? No, if lawyers can actually help, companies to be put up, why can't CS do a litigation service? Absolutely. So I will cover them as part of the insolvency here. But see, that tells you, despite we try to do comprehensive work, there are always newer and newer areas that are coming up every day in the country, every day in the economy. And we don't just need to even look at India. We have to look at the global play, because if today Indian talent is recognized as political leadership in different countries. Indian talent is recognized as the CEOs of large companies. Why can't Indian CEOs be making their mark in outside of India? We all know how difficult to clear CA and how comparatively it is easier to clear many other countries' equivalent qualification. So CA comes with the that additional stamp of authenticity. It is just that we just need to look at how to really work. Obviously, you may not be able to directly go and start business there. There are certain restrictions, etc. But nothing stops you from networking. Nothing stops you in building a networked international setup. I see that today happening. I'm sitting in Bangalore today. Many Bangalore firms have a tie-up with the Dubai. Dubai firms and Bangalore firms are cooperating. And similarly, I see a similar arrangement between Singapore and India. And the number of firms that have a tie-up between here and say California or here and New York. And similarly, I would say even Hyderabad there is operation. Even I see many Hyderabad firms having a similar kind of setup. But it is not something that people immediately think of. Because, but this is the way you have to spread your wings. So financial advisory, coming to this, there is a traditional approach, which is bookkeeping, technical accounting memo. Suppose somebody is asking you a question on how to treat this accounting challenge. So you'll give a technical accounting memo. And then there's a tax planning. Now, these are, I would say, traditional kind of work in financial advisory. What are the new ones? I have seen across companies, okay, in MSMEs especially, small and medium, micro may not need this. Small and medium firms do not have operating plan cycles. There is no annual operation plan. There is no quarterly plan. There are no, because you don't have annual plan, there is no monthly budget. Then there is no approach of zero-based budgeting and looking at expenses. You will say, this management should look at it. If they don't look at it, why should I go and as a CA tell them? Many times what happens, the benefit of an annual operating plan needs to be explained by a chartered accountant to the management. Probably you may have to put in your time and effort to create an operating plan for 1 year with the management and make them understand with an operating plan, with a monthly budget, how much cost controls they can bring in, how much of when they are deviating from the plan in terms of revenue, what kind of cost changes they need to bring in. Those parameters then will come into existence. If you don't even have a plan, okay, then you are like, the company will keep going as per the whims and fancies of the top management. One day the guy gets up from the right side of the bed, company goes in one direction. Another day he gets on the left side of the bed, company goes in another direction because there is no plan. Okay, so to me, if you want to add value to MSMEs, the first area where you can add is the bringing this discipline of creating a plan and then looking at variations in the plan. Remember, plan is never something to be why you did not meet a plan. You are not going to go and question people. Probably the management will ask their team. That's a different issue. But when deviations happen from the plan, question will be what factors led to those deviations, And hence, what do we need to do differently in the coming quarters? That's the question to be asked if you are the head of finance for that organization. CS need to move into a half CFO mindset and help MSMEs to come to this area. Only when management see value of it, they will then repeat. And once they see value, they will not let you go, because you are the one who introduced this entire concept to them and make them understand how this is going to actually help them as an organization. Working capital management. Okay. You ask these three words, every management says they know. Do you know what is management? They will say yes. Do you know what is capital? They will say yes. Do you know what is working? They will say yes. But working capital management is not a simple three words. Working capital management means, you start from the operations and then coming to how this needs to be funded, not the other way around. Many times CS start the other way around. What kind of opportunities are there in the balance sheet to fund working capital, and hence what needs to be done. But working capital management starts from looking at inventory, looking at debtors, what needs to be done, and then coming into, okay, today some part of it is funded by banks, some part of it is internally funded. How do we really manage the debt side of it? It's the secondary question. But first question is that as a business, where is it locked? Simple question. Okay, I can't see you, this is a webinar, but in physical, I have asked this question. How many of you as CAs taken a client's balance sheet, taken inventory, or taken the debtors and applied Pareto rule? I can tell you very few have done this. The minute you apply Pareto rule, you will realize, the client will realize that 80% of the inventory is blocked in transactions that are not giving them enough margins in the first place. So this insight needs to come from you. Now, they might have done this 80-20 in the past. The fact is the business has changed in the last quarter. Now when you apply, things have changed again. New insights need to be given. Which debtor you need to give credit? Which debtor you should kick out and send a legal notice? Is a call that is purely dictated by opportunity in terms of new business plus margin potential of the client. Who is going to do this calculation? It is the CA along with the management. And that will then tell you what to do to actually to reduce the debtors. Accounting automation. We wait for a client to come back and say, we need to automate. Probably by the time he comes back and asks this question, he's already identified some vendors, he's already decided what to do. It should be you who should be looking at his, what are the verticals that are there in that client, what are complex operations, what are simple operations. Given, for example, in some companies, there is a manufacturing which is very complex, but in some companies, it's just, assembly. It's not a very complex thing. So depending on the complexity of manufacturing, depending on the complexity of logistics, depending on the complexity of, their even working capital and, debt treasury operations, you have to select the right ERP, right accounting platforms, and convince them as to, why they should be taking this particular software. The minute they automate, it will liberate them from what they're wasting their time as management currently, and it will help you to go to the help them to grow their business. When we are saying partners in progress, this is what we mean. This is how chartered accountants need to help their clients to actually think in the next level. Workflow-based solutions for various business and financial processes. There are so many workflow processes. So if you take, for example, someone who is running a kirana, there are today hundreds of point of sale softwares, point of sale equipments. So today, between those softwares which manage inventory, point of sale equipment and point of sale software, lot of inventory management complexities are managed extremely well. And this doesn't have to be linked to an ERP. It can be standalone workflow, because the rest of the operations of that kirana operator can be managed with regular Zoho or Tally. You just need to bring in one particular software to manage the one complexity. Now, how many of us think of different parts of the business of the client and see where there is an opportunity, what is that they should automate compulsorily and what they can actually manage without automation? We don't apply our mind in that direction. Reconciliation service across various platforms. If any of you handled e-commerce companies, you will realize what I am talking about. One of the biggest changes that have happened in the last 10 years is that transaction size have become very small. Today, it is possible for someone to, sell you a 10 rupee pen and send it and still make money. Provided, obviously, you are ready to pay for the delivery charge, but that's not the point. The point is transaction values have come lower, and many companies are trying to bring it even further and further lower. Okay, at a point of time, Swiggy and Zomato were allowing you to order 20 rupees, 30 rupees item as well, right? So what does it mean? It means that the number of transactions for a given volume of revenue is very high in an e-commerce setup, because you are not restricting yourself to a particular class of customers. You are saying, I am going to serve anybody. Somebody can order me 5,000 rupees, somebody can order me 100 rupees, I will still serve. What it means is that your database is going to be filled with the number of transactions every single day. Now imagine a scenario where you have a revenue, you have revenue generating, equipment, whatever is the source, revenue is kicked out, and then billing happens. Then what is billed needs to be sent to a collection process. Then the collection needs to happen. When the collection is happening, it will come through various platforms, UPIs, bank, Valana, Tikana, credit card, everything. Think of the amount of reconciliation work that has been created by this kind of knowledge. Today, in most of these e-commerce companies, back-end reconciliation is a huge activity, and as we speak, also we don't have a one ready-made full-time solution to it, but there are many different solutions. If you identify areas where there is a high reconciliation requirement in a client and help them to solve it, you are giving them huge amount of control over their operations. Based on this, then they will be able to figure out where is their leakages, where they are not able to collect, or where they have collected, but the platform is actually keeping it and giving them after 1 week. So effectively, there is a working capital blocking. All these insights can come if you are able to help them in this process. Then toolification of repetitive tasks in the client. It could be a simple thing like month-end entries, but it can be even, there are so many other repetitive tasks that they do, which, they can toolify. For example, somebody may have a huge amount of travel happening. No, travel on account of their executives traveling across the place. This can be toolified. So the amount of then controls built around travel, cost management of that can all come down because you have toolified it. But again, application of mind has to happen from our side. Let me go to risk management internal audit. Again, a traditional area, I'll tell you we can do, which is non-traditional. Traditional is just internal audit. Look at it. End-to-end business analysis, key risk and mitigation plan. So when we say key risk and mitigation, I'm not talking about the typical CA thinking of risk. Many times the risks are completely different. For example, you may get into a business and then say your biggest risk is that your top 2 clients, top 2 customers are accounting for 70% of your business. That is your key risk. Or significant amount of commitments you need to do because you are depending on one China supplier, and that means huge amount of working capital. And tomorrow, if that China supplier goes belly up, then your business is going to go up. So there is a risk in terms of one large source on which you have no other second. That's the risk. These are businesses; they are not really financial risks per se. But when you analyze the business, you have to look into financial risk the way we understand. For example, stock insurance risk, or collections, or say kind of risk involved in terms of government contracts committing and honor the responsibilities, the directors and the officers' liability. All these are traditional healthcare insurance. Those are different risks, but there are other business-related risks that you have to identify. And once you identify, and I'm telling you, every time we have done this, we realize that when you do a back calculation, because they never understood this risk in the past, they have lost tons of money because they did not manage that well. That's a very important insight. Key technology and process obsolescence study. Which of their technology is likely to quickly expire, and process obsolescence. What are the processes that are right now obsolete? Competitors have moved on. Now you may say, why is it a CA area? I'm saying unless it is a hugely technical, in the sense you need to have an engineering degree, then I wouldn't call it a CA. But other than that, anything that could be done with the little amount of eye to detail and doing a bit of research and talking to some experts, I would put it into this. I have seen many CFOs who are very sharp in terms of understanding what kind of technological specifications are required in their factories or in this to actually to optimize. That is what makes them excellent CFOs, because they are able to bring value in terms of those, not really in terms of saying we'll cut some 10 jobs here and one vendor will replace. Those are different level. But here they are talking about in terms of process improvements, what can actually bring in. For that, you need to go deep into the business of the client. It's not going to happen by quarter end one discussion with the client. ISO certifications, process audit and solutions, insurance review, contract review, pre-mortem of contracts with prospective customers, vendors. How many of your clients come to you saying that I'm able to sign this with my client, okay, and help me to identify how to structure this. Probably they have not come back for two reasons, and one reason you will not like it. One reason could be you never told them that you can do this. Second reason, which is possibly they don't think you have the capability to do it. Okay. Second one, you will not like it, but the point is that these all can be acquired. You have to acquire the skills, then you have to demonstrate to client. You don't need to charge any money first time. You say, get me a contract. Signed contracts. You take 3 or 4 signed contracts, sit with the client and say, see, these 3-4 clauses you have set in, you could have structured differently. You give them the insights as to where they have lost money in the past. Automatically, next time he's going to sign, he will come back and say, tell me, sir, what is your view on this contract? So this is where the lot of value will come in, because he's about to sign a 10 crore deal. In that, because of your one clause, he's able to save you a 10 or 20 or a 25 lakhs. He will be more than happy to give you whatever charges fees you are going to charge you. So let us go to the next one. Taxation, return filing, tax calculation, certification. These are standard things that we do. Compliance dashboard with the auto reminders. How many of you have set up a system in your client where every month end client gets a dashboard which says he has met all the compliances 100%? Again, the number of hands I see is 5 out of 100. 95% of us are not bothered whether he is meeting or not. When he doesn't meet and then there is a problem when he comes, at that time we get involved. But if you think about it, if you are a well-wisher of the client, this is what you should set up in the first place. When, let us say, somebody is not able to meet a GST date, when somebody is missing out on a PF payment, or some ESC obligation getting missed out, many times what happens is that probably the labor department within the HR department may not even tell the boss. The bosses don't even have a method to even to understand whether they are 100% compliant. These are well set things in the large companies. I'm not talking large companies, I'm talking MSMEs. Large companies will have all these compliance dashboards going even up to audit committee or board and being published. But in small organizations, these things don't exist. It is for chartered accountants to actually advise and to make them think through the regulatory compliance, how to set it up. I'm not talking about a very complex thing. I'm simply talking about a simple dashboard which tells either 100% you have met all the due dates for the current month and you have not met something. And when you start listing out, I've seen this, even in a small business, the number of compliances, because India is a land of compliances. So we have at least 25 to 30 events in a given month. 25 to 30 events. Expect a client who has not set up any process around it to meet this 100% month on month is not going to happen, absolutely, obviously. So we have to actually help in terms of setting it up. In-depth study of contracts, arrangements, shareholder agreements, strategic partnership to identify regulations and compliance issues. So this is again, this is something that we can easily do, but you will have to demonstrate that expertise, and you need to be aware what the client is doing. That is why those meetings that I talked about are important. Only when you talk to client regularly, if something is happening like this, you will say, okay, I am talking to some investor or this discussion is going on. That is when you should be able to say, If something is happening, you may have a lawyer or you may listen, but you trust us. We are not really bad. We have done this in the past. I will not even charge you anything. But if I get something out of it, I will, tell you I am saving this kind of money. You can get into that kind of a conversation. Look at the contracts and help him in terms of structuring it better. Compared to a lawyer, a chartered accountant who understands the business of the customer is in a much better position to actually do this activity. Trust me. Financial reporting and analysis. Standard is what? Preparation of MIS, yearly financial statement, audit support. What are the new age services? Benchmarking key metrics and ratios with industry standards. Requires work because industry standards are not going to be available off the shelf. You have to download in the balance sheets and P&L, figure out where the sources of information come in, work on it. Most importantly, you have to help the client to set up their own internal MIS team. Many firms do not have their accountants develop as an MIS, which is a mistake. They need to be clearly segregated. If they cannot afford an MIS team because that's going to cost. You say we are there, we will do this activity, and this is something that can actually help you to work. They will start seeing value once you do it for 2-3 months. Once they start seeing how vis-a-vis market their numbers are changing, once this understanding comes, clients will be able to appreciate the value that you bring to the table. Budget monitoring. So they might have set up some budgets, but if budget gets monitored across functions, unless they have a very structured budget monitoring tool, it could be a business intelligence tool, it could be a standalone tool where they populate the budgets and then feed the numbers from the financials. Budget monitoring doesn't happen at a central level. Many times, in many companies, what happens is somebody centrally gives a budget. When each department reviews happen, that department gives a self-declaration that we have met the budget, sir. Now, when they say they have met the budgets, they are conveniently ignoring things that they did not pay for, which you would have accounted as part of provisions. They are not going to account. They will say, oh, agle mahin dekhen. So there is a good reason why budget monitoring needs to be centralized and done in time in order for the business to actually to see value out of it. Streamline KPIs, key cross-functional reports. I've seen tremendous value coming on account of this activity. Many times in companies, bosses think this is the target for the team, but the team thinks something else is their important activity. And this may not be big, but minute differences at each level, okay, will mean that in terms of the totality of the work that has to happen from the company, bosses think that there is a certain set of activity that are supposed to happen. Team, there are a lot of gaps between the boss, what they think and the team is thinking. Eventually, the result is what? Result is the end result of revenue, end result of a profit is not getting achieved because somebody did not do what the boss thought he is going to do. So this is where this KPI streamlining, ensuring the whole thing is aligned, and the key cross-functional reports. Each department should not be saying they declare their own victories. There has to be, if let us say two departments need to work together to achieve something, the report has to be cross-functional. That can only happen from a centralized finance team or a virtual CFO who is actually helping them to implement this. Dashboards for key reports. So the human mind can't read large reports every day. We don't have the time, we don't have the patience. And while people will agree initially, okay, you send me the report. Tendency is that after 1 month or 2 months, reports keep coming and sitting in their inboxes, they don't see the reports. Because report reading takes time and they have more pressing things in their mind to do that time. While there may be one problem hidden in that report waiting to be discovered, but they did not see the report. So how do you solve this problem? Through dashboards. So what does the dashboard do? Dashboard will you define, okay, there is a detailed inventory report, A class, B class, value, this aging, all that is there. What does it eventually show? It will show a certain number of days of inventory, a value above budget, or as a percentage of revenue, whether more or less. You define these as parameters in a dashboard, and the same report, which is that long, gets into a graphical or a simple to read dashboard, which goes to the management. Now, reading this report stops to be a 5-minute activity. It now becomes a 10-second activity. Then there is every possibility that the team starts looking at the dashboard. But thinking through the business, converting the data that is there into reports, converting those reports into dashboards is an activity that you are well qualified and you should charge money, and businesses will see value out of it. This is a traditional income statement. Okay, all of you know the revenue, other income, cost of goods, manpower, technology, the depreciation, total PBT. I think any CA who has passed would have seen such in both in his practice or at his principal or as part of the test papers and real this one, some at least 100 of these kind of P&Ls. This is the way a traditional P&L is made. What is it? What is PM here? Previous one. What is CM here? Current. What is variance? Variance. What is the variance in the previous one? I'm telling you, I have seen many P&Ls where even this is not there. Your previous month is report is not there. It only shows current month number. Somebody says, okay, sir, this is a current month P&L. Take it. There is no comparison. But at least in many places, even at least this much of comparison is given. My personal experience as a CFO, no report is worth seeing unless there is a comparison. Unless I know what to compare a particular number to, that report doesn't make sense. An absolute number by itself will never make sense. If I say India GDP is this number, okay, or India GDP last year was a separate number, as a separate data points, nothing will register in it. But if I both the GDP numbers I together and say this year we grew by 6%, then the 6% gets registered because our mind is, wired in a way to actually to understand comparisons and make meaningful analysis out of it. That's why these comparisons are important. But this is still a traditional one. How it should look like in today's world, that simple P&L does not help management in terms of understanding in detail. In most of the business today run on very, very thin margins. Gone are the days when people make 60%, 80% margins, gross margins, and 20, 30% healthy P&L margins. Margins are really, really tight. So then what happens? So you need to understand these margins in its level of detail month on month versus previous periods in order to run the business. Now, who has to set this up for the management? According to me, the chartered accountant who is helping them with their P&L and with their accounting, because he is the best person to put this structure and modify it accordingly. What does it say? See, if you see revenue COGS, you have gross margin 1, high level of gross margin. This is a typically, I would say, an e-commerce company. Then there is a fulfillment cost. What is fulfillment cost? In order to reach the material to the customers, you are incurring certain costs, fulfillment. That cost comes in. Payment gateway charges. So when you include warehouse, PG and all of this, you come to the gross margin too. First gross margin one looks very healthy. Many of these product companies, if you see, which are only operating on the cloud and on the digital platform alone, their gross margin one is very good. But the minute you put fulfillment cost, PG and warehouse, so the gross margin goes down significantly lower. Then you put sales, marketing, distributor and channel partner costs. Then gross margin 3 is even further lower. Then you would have spent a lot of money on the technology because all these are running on platforms. That cost you need to segregate into technology for product development and technology for maintenance. Technology maintenance has to come as a P&L cost. You subtract that, your gross margin 1, which was say very healthy 40%, by the time you come to gross margin 4, it is minus 20%. Now this understanding why, where money is going and how this is changing month on month is very important if you have to really do anything on the startup to really make it a success. If you don't even understand this and a very high level of, okay, I have a high warehousing cost, delivery partner squeezes me, these kind of high level statements do not really make a business sense. In business sense, you need to quantify it to a percentage, figure out what options are there, and then take necessary action. Action always comes with information. You can't take action if you don't have right information. This kind of statement will create that. In order to create this statement, this is not going to come from any textbook. You need to understand the business of the client and understand what is the right gross margin 1, 2, 3, 4 for them, and then create this. Business plan and valuation. Traditionally, issuance of valuation report. Stand a lot of people, valuers work they do. Okay, some are certified, some are not certified, but they can still do because they understand the basics of the business valuation. Okay, new age services. Today, valuation is not simply based on just the cash flows. It is not simply based on time value of money and then a generative value. That is what we all learned in our textbooks. But today, for startups who have not even started business, or even MSMEs which are right now making money, but they are doing a turnaround, they are actually getting into some new business. The methodologies have changed. There are completely different methodologies that could be applied, and you can think of how these could still be profitable in future, and based on that, really valuation can be done. This is not a retrofit valuation I'm talking about. Okay, somebody says, no, I need a 10 crore valuation. Then, Excel is defined as a tool that can be tortured to give you any number you want, right? So this is not what I'm talking about Excel torture. I'm talking about a real business-based data capture and applying it in the methodology to arrive at the right business value. Provide assistance in preparation of business plan. Business plan preparation again is not just Excel work. Business plan preparation is getting into the details of starting from the lead generation, starting from what actually drives, where is the customer base, who are the likely customers currently, who are the likely customers in future as and when the product changes, and based on that developing an appropriate client acquisition and revenue generation, and deciding how exactly that revenue will be serviced. What are the kind of teams that you require to actually to meet that? So build a business plan from basics. Secondary research on business valuation to arrive at anchor business valuation. So business valuation is never it's an art at the end of the day. So there are 3 or 4 different business valuation methods. When you put 3 or 4 of them, probably you get a range, and then you get some kind of a number which is somewhere in the middle. And with that, then you go and approach the investor saying that no, I need this valuation. But to do that with the conviction, you require all those valuation methods to be done and helped by the chartered accountant. Facilitate investor discussion and assist in arriving at a business plan. I'm obviously talking about these are not going to be done. You can't have some 50 companies investor valuation being done simultaneously. You will have to pick and choose your battles also. But when you participate along with the client, help him in discussing with the investor and figuring out an appropriate business value, you are now really doing a great financial and professional assistance to your client. So I put this one here. There are different valuation methods like Berker's, Scorecard, then First Chicago, Venture Capital. So and Mr. Ashwat Damodaran's valuation course are well advertised. There are enough and good methods for you to actually to learn and understand. So I'm not going to use the details of it. It is just a eye opener as far as I'm concerned. I'm not going to delve deep into it. But this is an area again. If you are interested, if it makes sense to you, you can actually become an expert and really assist MSMEs to actually to gain a lot of value. What is going to happen in the next couple of decades is that many of the MSMEs today that you see are going to get into listing. They will be into NSE listing, and as and when they go into that, many of these valuation methods and other things become relevant to them. So having that kind of an expertise at your end, you will be participating in this revolution that is happening right as we talk. As we talk, actually, the last 3-4 years, there is a huge amount of jump in the NSE listing of MSMEs. And what we are still seeing is still, according to us, just tip of the iceberg. There's even not many MSMEs where the value is waiting to be discovered. And you should be part of this, this new evolution of MSMEs into listed entities. So this is okay. I'll not get into this because we don't have time for this right now. But this is a way deep tech how we do evaluation. There's an explanation example here. So I mean there is absolutely no revenue at this point of time, no expenditure, only some expenditure that's happening. But we have put a lot of data put together and then arrived at a valuation of $42 million. But then it is not 42 million because somebody asked us to make a 42 valuation, but based on certain future sales numbers, and then there is a certain multiple factors that you have to take, and then future valuation discount for unforeseen events. All of these there are a lot of judgments involved. So appropriate judgment which are documented and ready for audit, then we arrive at this kind of valuation. So there's a whole art of determining multiples. So see, for example, in this previous example, 3x multiple was because of advanced technology and demonstrated use cases. 2x was because there was an experienced team and a deep expertise in AI and deep tech. So 3x multiple was because of strategic partnership they have lined up and supply chain and distribution network. So like this, these elements then get into the calculation and the valuation keeps going up. So growth stage valuation goes into MRR and monthly run rate and annual run rate based valuation. It could be based on gross merchandise value, then traditional revenue multiples, EBITDA multiples. Actually, EBITDA is more traditional. Revenue multiples is more of a recent phenomenon because when you have no profits, then you look at revenue and get into multiples of that. If you have profit and if you are able to predict a future steady profit, then you will go into an EBITDA multiple only for evaluation. Then the DCF is, all of us know this. Then comparables. That's a lot more prevalent than what you imagine. So you can do all these calculations. People will say, okay, tell me company of your similar size in any market. It could be in India, it could be outside. What kind of valuation at your stage, with which investors came into that? Once you have those comparables, then your number becomes more justified. So this entire startup supporting is an area large area by itself. Traditionally, it would have been audit and advisory and compliance and regulatory. Today, startup registration, MSME registrations, various allied benefits you can actually help them to get, and virtual CFO services you can give, assist in company operation, business decisions and strategic plans, go-to-market strategy for them, and coaching and mentoring the startups. All these areas where many of the CS today, including our firm, we do this startup support and mentoring. Sustainability and social reporting. Traditionally, it always meant audit and advisory support and compliance and regulatory service. But today, there is a sustainability reporting itself has evolved into a area by itself. Okay, so there are a lot of disclosures to be made, and then there is a ESG goals, communicating the company's progress and efforts to reach the goals. There's a level 1 to level 3 kind of emission calculations and how this is to be. There's a lot of guidelines and this one around it. So it is important for you to understand them before you even issue any kind of reports around this. So you can do social audits and impact study and reporting. Really go into Google and figure out how many CF firms today even offer this. You will see that many of these non-traditional areas are actually done by firms which have no financial background, but they might have a technical background. But if you get into the ESG, you will realize that a lot of the numbers that are required for ESG have to come from financial books. A lot of the data will have to come from the business. So there is no reason why ESG has to be only for technical teams. ESG can be a very important area for a CF firm to actually to build their practice on. So this is the scope 1, scope 2, scope 3 sustainability levels calculation. And today, as we speak, every quarter newer and newer developments are coming in. I don't know how many of you know even areas like carbon credits, green credits. Green credit is an India-specific phenomenon. There is a lot of opportunity there, even for the businesses to do some good thing and at the same time, benefit their financials in one way or the other. There are opportunities for somebody to set off their negative emissions number by taking green credits somewhere else, and then you can optimize. You can do. You can meet your social responsibility goals at the same time. You are meeting. You are doing something good for the country, good for the environment. So there's a area by itself. It's a large area. Forensic accounting and fraud prevention. So traditional view identification during audit services and specific assignment. This is what you would have done in the past. But today, see, providing services to blockchain, crypto companies on chain analysis and finance models isn't. And I can tell you, many of these companies, they may claim a lot of things are under control, but a lot of things are not under their control. They don't have a full grip over their financials. They don't have full grip over their processes. And so one small error here and there, suddenly they lose $1 million just because somewhere somebody missed putting 1 0 in one of the parameters. Those kind of errors happen, whether they're deliberate or not deliberate. That is something for us to determine. So there is a huge opportunity in this area itself because in this entire area of blockchain, crypto, and so in this area there are finance models are different. So you need to then figure out how do you do a forensic accounting and fraud prevention in this area using data analytics tools to identify anomalies in information. So anomalies in information. Imagine the kind of databases these companies have. In that, with the human, human oversight and all, you can't really determine any anomalies. Anomalies in the sense, suddenly one particular country's clients have done more crypto transactions compared to somewhere else. Why did this happen? Before you even figure out, that this happened already, money would have been lost. So you need to have data analytics tools that will actually highlight any kind of movements that are happening, so that at an org level you have these are actually few seconds only for you to actually available to go and take action. So those need to be built in. Independent direct services, which most of you know actually. So this is again a developing area. A lot of opportunities are there. Having said this, a lot of people get registered as independent directors. Nobody even calls them. That also is a fact of the matter. Why is it so? Because two things actually. Many companies don't really think they require independent directors, but the reality is that they need. And an independent director coming in once in a quarter, using their experience, giving some directions, has helped many companies. But till they realize it doesn't happen. But in the meantime, government is also pushing independent directors from a different perspective. They believe that independent director is a requirement to protect the shareholders. So these trends eventually will mean that a lot of CS will actually be able to offer these services. But tell me, suppose you are a company and somebody with 2 years of experience of CA, they say that I want to become an independent director. I am available. How likely that you are going to take them? This will require a certain amount of expertise, certain amount of experience. Only with that you can actually offer yourself as independent director. So you have to acquire them reach here. But definitely for slightly middle-aged CAs and seniors, definitely independent directorship is a good opportunity. Outsource CFO services. I have conducted sessions on this separately. So this is again today many CS are offering this, and there is a lot of demand for virtual CFO services because full-fledged CFOs are unaffordable for MSMEs. CFOs with the experience comes with a huge amount of expertise. At the same time, their costs are high. And more importantly, I think from an MSME perspective, if they have a good amount of team below, a CFO needs to spend few hours in a month. There's no requirement for the CFO to come and sit there full time. Having said this, it also doesn't mean that you become virtual CFO and sit in Bombay and start advising somebody sitting in Indore. That also wouldn't work. Because until you can be a CFO, either full-time or a virtual CFO, unless you go into the business of the company, without understanding that you can't really do this. So it involves a certain amount of involvement in the business. Having said this, it is Ferrari at a Maruti price. And it can also create a pay as you go. This year you take, in the entire year you take 50 hours or maybe 100 hours. Next year it will go to 200, 250 hours because business has grown. So they can keep paying you more as they progress. So that's a model that many startups like actually. So it gives a flexibility in operation for you as well. So virtual CFOs do a lot of things, ongoing financial planning and analysis of overall financial strengths, then assessment of the financial viability of a new product ideas and all that. So analysis of pricing, evaluation of financial data capture, assistance with raising capital, preparation of financial presentations for the board. These all could be done even without sitting full time in the in the client place. So I'll briefly cover now. I would still want to keep this 10 minutes at least for question answer. So I'll try to cover the MSME trends. See, fundamentally at an MSME level compared to large corps, why there is a huge issue in terms of funding. One, there is an information asymmetry. What MSMEs do, they are not able to present in terms of proper information, or for whatever reason, their published information is not really representative of the real business. So this information asymmetry is a fundamental problem, because the minute that information is incorrect, you try to build any kind of scenario based on which new funds have to come in and they have to grow a business, is going to become not factual, and then it won't meet a banker's requirement. And more importantly, you build something which is completely fundamentally incorrect information. Based on that, you build a projection. Next year, you can't. The banker will come and ask you a question. Actually, why did you give such kind of projection? Why the reality versus your revenue projection and versus your inventory production projection, there is a 50% gap. This is what you have projected versus the reality. You will not have an answer to give. So the information asymmetry is a fundamental problem for MSMEs to get funding. Then they don't have financial know-how. They don't understand any kind of software-based accounting, etc. So all are mostly manual or tally-based accounting they do, and there also information is always late. It's not even timely. At any point of time, their accounts is 3 or 4 months behind. The lack of technological advancement and ease of doing business. They don't adopt any kind of methodologies and technologies. Now these are the things for an investor to put in money. If they see you as more modern, more progressive, and is likely to win in the marketplace, they will fund you. But if you are seen as more traditional, saying that I will continue to do the same plastic molds that I have been doing, my great grandfather did in an industry area outside Bangalore. With that mindset, if you are going to continue, unlikely that any banker or any lender is ready to be funding you. Existing high cost debt from unregulated markets, because they have not got funding from the main players. They have gone into unregulated market, but there is a high cost, and that actually sucks any profit that they make goes into just servicing of the loans. So then, if there are no additional new cash flows, no banker is going to give you fresh loans. Inadequate collateral, we understand this problem, and then limited equity capital. Equity capital either is existing, very minimal, or it is already eroded, already lost, have eaten away all the equity capital they have. So because of this, many times when MSME walks in, most of us see this situation. It's not that we are the first guest to them they have come. Probably we are the 15th person they are walking in with their balance sheet and P&L. When they come with this setup, there is hardly anything we can do to immediately fund them. So we should be upfront about what cannot be done immediately. But if they are ready to work with us to what can be done 3-4 months later, we work with them to figure out and set the balance sheet right, set the P&L process right. And with some calls may have to be taken from their side as well. So post that, we can actually then get them ready to face a bank. So MSME funding solutions are, I put in a 2x2 box here. Conventional trade credit, fund-based overdraft, non-fund-based letter of credit, bank guarantee, etc. there, and term loan and bridge loan. These are long-term. New age ones: trade credit, LC discounting, supply chain financing, factoring. Then fund-based revenue funding, channel financing, GST overdraft. Government schemes are there: MSC, CGSS, Mudra, and all. Structured products, hybrid, mezzanine debt, venture fund. This is a topic by itself, but these are opportunities on the long-term side, provided your balance sheet is good, your P&L is looking promising for the future, and your credit rating looks decent to the lender. So IPO, this is again a huge opportunity. You can see that how it went up at a point of time, but again it came down. But right now it is on the ascent, and this is a market definitely all chartered accountants should eye and look at how to play here. So SME company and technology company I have included here, but this is eligibilities you can actually download from their website as well. The important point I'm making is it's not very difficult. It's not that there are onerous requirements. Yes, you need to be profitable. You can't say for public to come and invest in your company if you are making losses. No? That's not going to happen. But it's not that you need to make tons of money to to attract public funding. MSME IPO benefits are there. So these are the higher visibility and profile. So why we are putting this is that many times, especially if you take out Maharashtra and Gujarat, okay, in rest of the markets, lot of organizations which are eligible for IPO listing are not going for it because they are not aware of the benefits. They are not even understanding how it will change the perspective for the organization. We are saying, this is a huge amount of an opportunity, even from the organization side, which we need to explain and convince the entrepreneurs. Okay, so I've come to more or less to the end of this one here. So these are value-added services. There are like adopting digital tools, ERP implementation. These are all things that chartered accountants can do. Digital transformation is an area where chartered accountants can really play a role. In conclusion, I will say CS, we are in the forefront to uplift MSMEs. I think if anyone has a doubt after this 2 hours, then I have not really done a good job. I honestly, sincerely passionately believe that the chartered accountant should do a lot more here to assist the MSMEs to really grow. One important thing is that for MSMEs, the biggest challenge is what I'm presenting here. Many MSMEs have a short connect, which is their advisors are local branch accountants, bank managers, accountants, fellow entrepreneurs, and friends and relatives. As CES, we need to help them to build these long contacts, which is MSME forums, government funding, how to get it, business and finance consultants, how to reach out to the right people, MSME schemes. This long, if the minute you enable the MSMEs to reach out to here, their progress starts at that point of time. So CS job is to actually to make them migrate from this short, strong connects to long but difficult, connects. So we have a huge role in the move towards digital economy. I've put into 4 different buckets here. One, in terms of what we discussed on the fundraising and the financing part of it, the top left that you see. Then the top right is risk management, compliance assistance, legal regulatory. To an extent, past traditional one, but I explained a lot of newer methods that are involved into doing this. The bottom one on the left is typically virtual CFO services, cash management, working capital management, inventory management, basically involved in the management of the organization to really bring improvements in profitability and all. And the last one is on the digital part of it, digital economy. How do you really move? Adopting digital tools, ERP implementation, integrating business functions and process and transformation. This area, chartered accountant should play a significant role, and MSME can only prosper if they actually act on it. If they don't, if they remain old-fashioned in this one, they will simply die their natural death over a period of time. So MSMEs need to move to this. Consultants are business enablers. They are not compliance costs. Okay, we today complain that our clients think of it as costs, but the onus is on us to explain and convince them that we are business enablers and not compliance costs. And by doing various activities that we discussed today, you can actually help the clients to reach there. Okay. So public should be educated to become self-reliant. Mahatma Gandhi ji. So once they know that they have got to stand on their own legs, it would electrify the atmosphere. It is our job to make MSMEs to understand that they have the capability. They can actually become the engines here. We are right now 30% of MSMEs are 30% of the economy, 49% of the exports. It can be much higher number. Globally, it is upwards of 40%. This opportunity is there for MSMEs, and it is for CS to make the MSMEs understand this. With this, I come to the end of my presentation. Over to you, Ashish.
Thank you, sir. The session was very insightful. You've given so many domains to cover, so many non-traditional practices that we can cover. There are a lot of
almost all things you have covered, sir.
Sorry, sir.
I'm saying Venkateshwar sir covered all the things.
Yes, definitely. He's covered so many opportunities that VCS can encash, which are totally beyond the traditional practices.
Yes. You give us such a deep presentation on each and every topic. Very.
So, but I want to ask that how does one select what stream that he or she wants to work in? Because like you said that you cannot work in every stream. How do you suggest us to select that particular expertise?
See, first of all, it's a matter of own choice. Somebody is naturally a good tax person. Somebody is naturally a good analyst. Okay, somebody is a good process person. He's absolutely the right person for getting into ISO certification or that. Now, these are inborn. So somebody who is good in process, if I push them to tax, it wouldn't work. So the discovery of out of this what is more suitable is a independent individual journey. It's a lonely journey, unfortunately. But you still need to do it. It's today Devang has to discover what he's good at. Okay. Now all kind of assistance can be given from outside, but at the end of it, it is still an own journey. So out of all this, I can only show the whole spectrum. The rainbow I can show you. Which color you like, you have to decide.
So I would like to ask one more thing: that what are some of the emerging trends that a CA should be aware of, which are something like it's very basic that you have to know, and since it's a very dynamic environment, and you should know some of these trends so that you can help your clients also. Are there any pointers for this?
See, I think largely I talked about progressive mindset. Okay, if you have a progressive mindset, and that's what, see, it will, this entire journey starts with the self-discovery. You need to plot your CA, your firm, yourself in terms of where you stand. And that's where the journey starts. Having said this, digital way of doing things. Whatever you do, you could be doing tax work, you could be doing legal work, you could be doing accounting work. What is happening digitally in that area? What is the latest opportunities that are there? This is, I would say, very very fundamental. Now, as a CA, obviously, accounting is your mainstream, and there are so many development that continue to happen, and especially in that emerging areas like ML, AI, and today so much of tech SaaS opportunities are there across this one. So I think it's important for people to keep track of what's happening in this area. And in a lot of the time, the tracking could be just the technology development. It's not that you are going to immediately see something happening on the finance side. But if the technology development is happening or an investment is coming in, for example, so we have with Dubai, we signed a couple of years back a cooperation agreement, right? So with that, a lot of things opened up. Now these are the kind of big ticket items you should track. If you don't know with which country we are signing up other this one, and with the say institute is also having kind of exchange programs with the other institutes which will open up opportunities. These things should be kept track at CA level. If you don't even keeping track of it, and then tomorrow crying over spilled milk is your problem, not anyone else's problem.
So we have a few questions from the audience which are specifically related to the MSMEs. First one is, what is the method of assessing working capital requirement for an MSME unit?
Okay, this is I would say, technical question.
Yeah.
So I would say, the person may have to actually put a little bit more detail and send me a mail, then I will be able to help. Otherwise, because working capital is a function of your existing business. Now, you could be asking for working capital for your existing business, or you are anticipating increased business and saying that for this increased business, I need working capital. The situation is somewhat different. So in each of this, it involves understanding the business process. Today, where do you stand in terms of your policies, your inventory policies, your debtor policies, and based on that, arriving at what is the today's as is situation without bringing in any improvements. From a banking perspective, that is what happens. So you're not going to build in. Okay, I will bring in some improvements and put that in. As far as the bank is concerned, you are saying, okay, if I continue to do the business the same way, how this number is going to look like? Do that projection and then arrive at a number. So, but the elements of that will be very specific to the business. So, in some businesses, inventory is important. In some businesses, probably advances that you need to give to the vendors is important. It's very difficult actually to give a single answer to that.
The next one is, what support is provided by the ministry to improve the design of products produced in the MSME sector?
So there is a industry, there is a institute, there is a technology support to this one. I can send you the material. Let the person send email to me. I will send the details of it. There is a product design support that is being provided to the MSMEs, both in terms of actually expertise, and secondly in terms of the cost involved could be subsidized. These are specifically covered under the MSME schemes. So I can directly answer, separately answer this question on me, or if you Google out also, you can actually get the answers. But let him send a mail, her send a mail.
What are the eligibility criteria for the PMS scheme?
PMS?
I think this relates to the procurement and market support scheme for MSME. That is what I could figure out.
Procurement. See, procurement, there is a separate separate portal where you can actually register yourself, and then you can become eligible for government procurement. There are certain eligibility criteria, and your products, if they go through certain certification, then you are eligible. So there is a specific portal for that. You have to register yourself. Then first question is, are you registered as an MSME?
Yeah.
The next question is, are you then going into the respective portal and then registering?
So the next question is, it is a general question. Are there any specialized branches for lending to the MSMEs?
Actually, each of the commercial banks nowadays, startup and MSC focused, they create an internally a department. They're not branch specific. They're internally a separate team is created because they also want to achieve some internal numbers on this, and they believe you need to have a different lens to understand MSMEs. I know for a fact that starting from Bank of Baroda onwards, almost all companies, even the public sector companies now today have a separate vertical for startups and all that. Even the MSMEs also, there is always, but in each department, in each bank, this is called separately.
Yeah, even the government is very much interested into pushing the MSMEs and startups forward.
Absolutely.
Then there is another question. What are the challenges with the business funding in MSME?
Challenges in business, I think I covered them.
Yeah. So I think probably
the biggest issue with the MSME funding.
The biggest
is that many MSMEs think they are eligible for funding because they are MSMEs. Okay. So the way the government schemes are designed, none of them are meant to be given as subsidies. You have to understand, funding is not the same as subsidy. Okay, when you are not eligible for something, then you get a subsidy. When you meet the criteria, then you get a loan. Most of the business, the challenge is that their balance sheet is incapable of taking any further loan. That's the biggest challenge. So there is no schemes. You can go through all the schemes, including SIDBI schemes. Everywhere, very clear. You have to have a collateral. You should be able to pay. You should be able to show the cash flows that are likely to happen with the new loan utilization. These are the requirements. When you can't show that, you are not going to get it.
I think even one challenge which I think that is faced more regularly is that some of the schemes which are provided by the government, even if you apply in them, there is a high rate of rejection in that, which are quite more beneficial. So there are a lot of schemes for MSMEs. So the most beneficial one has a higher rate of rejection than the one which is less beneficial to an MSME. That is what I think is the biggest challenge.
See, I don't know. There are two different sides to this problem. In some cases, there is a bit of bureaucratic approach to things. So every I needs to be dotted, every T needs to be crossed. If you have not done it, then you lose. Some bureaucrats don't take a supportive approach. That's part of it. But many times the rejection happens because they should be rejected.
Yes, so I think that's the biggest challenge. What I feel, that's my personal opinion.
See, I keep telling many times, many guys who come, you don't require loan. You require equity in the first place.
Yeah.
If you don't have equity, you are not going to get any further. This one, you can stand on your head also. Nothing is going to happen.
Another question which I'm very eager to ask is that when can we say that an MSME is ready for IPO? When is it actually ready to get listed? When do you?
Okay,
what factors are the deciding factors for this?
Deciding factor, I think we mentioned. See, the eligibility from the MSME board is very clear.
Yeah.
Typically, I would say this work has to start at least a year before. So, based on your projections, if you are likely to hit these numbers and you will be ready with an audited balance sheet that can go to NSE in the next 6 months or so, that's the time when you start work. There's a lot of work to be done. Okay, there is a preparation. Many large companies, 1 year. Even MSMEs people will say that it will be done faster and all that, but according to me, good around 6 months of time you need to keep actually. So you need to you have to calculate beforehand the time and start from there. So if you are seeing 1 year down the line you are able to meet all these requirements, probably you should start the work now. Otherwise you will lose that period. I mean, probably after that also you can do, but the earliest you can start is the preparing stage is that stage.
So, I think these are all the questions that I have that I've received. If there are any other questions, I'm happy to ask them.
Okay, so
yes, sir. No, there is no any other questions. But one question I want to ask with you, sir. You in the PPT you mentioned that if you are a CA, so you don't have to do any other thing, means a degree. Sir, why it's so?
No, I didn't say you don't have to do any other CA degree. I'm saying your CA degree is more valuable than you think.
Okay. Okay, sir. Thank you, sir, so much for giving a wonderful session. Thank you, Ashi ma'am,
Thank you,
for
sir. Thank you
doing
so
a
much.
coordination. Thank you, sir.
It's always a pleasure to talk to CS.
Okay.
I think we can just end with a formal vote of thanks.
Yeah.
Yes, sir.
Yeah. So, on behalf of the entire committee, I would extend our thanks to the chairman, sir, and the vice chairman, sir, and our eminent speaker for today, Mr. Venkatesh Bhatt, who is an excellent chartered accountant working in a non-traditional CA practice. Thank you so much, sir, for all the insights, and let's keep in touch.
All the best.
Thank you,
Thank you, sir.
Write to us any question they have.
Okay, sir. Thank you.
Thank you.